Welcome to the Rainmaker Podcast with your host, Gui Costin. The goal of this podcast is to give listeners a unique look into sales strategies from top industry executives. We introduce you to the heads of sales and heads of distribution who will help you understand the inner workings of the successful sales organizations from philosophy to execution. This podcast is essential for sales professionals seeking wisdom from the best in the field. If you're not familiar with Dakota and their Dakota Rainmaker content, please check out dakota.com to learn more about their services.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediate database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today. What's up, everybody? It's Gui Costin, founder and CEO of Dakota. Welcome to the latest edition of the Rainmaker Podcast. I am joined by Andrew Saunders, who is the founder of Castle Hill Capital Partners. Andrew, welcome.
Thanks so much for having me. This is great.
So thrilled to have you. So, Andrew Saunders is a seasoned investor and entrepreneur specializing in the growth and development of niche alternative investment strategies. He is the founder of Castle Hill Capital Partners, a New York City-based broker-dealer and strategic capital raising firm with registered reps across the U.S. Additionally, Andrew co-founded and serves as managing member of Uinta Investment Partners. Uinta delivers uncorrelated income strategies through a litigation finance strategy and a multi-strategy income fund that deploys capital into a targeted selection of specialty finance strategies and direct investments. Andrew invests personal capital in a range of private businesses and actively supports the scaling of alternative investment strategies that meet four key criteria. 1, strategies in inefficient markets. 2, strategies that have limited competition and capacity. 3, teams with deep domain expertise and a proven track record of collaboration. And 4, leadership with uncompromising integrity, significant skin in the game, creating strong investor alignment. His mandates and investments span hedge funds, private equity, specialty finance, venture capital, and a variety of public and private SPVs. Andrew grew up in Madison, Wisconsin, and was a 1993 graduate of Haverford College. He spent his junior year at the National University of Singapore. Post-graduation, he lived in Southeast Asia for 4 years as a teacher in Kuala Lumpur, Malaysia, and entrepreneur in Indonesia. Andrew is blessed to be married and have 2 children and lives in Brooklyn, New York. Let's kick it off. Take us back. Where'd you grow up?
Sure.
30 seconds a minute, but so we can get a sense of who you are and what
yeah,
you're up to.
and evidence of life is very small. We oversect in some places. So I grew up in Madison, Wisconsin, and I went to school at Haverford College, a place you know pretty well.
Yeah.
After college, I lived in Asia for 4 years, which is sort of a non-traditional Wall Street path. I lived in Malaysia and Indonesia, and came back and did 8 years of corporate investor relations consulting. So that meant I did hundreds of PowerPoint presentations, hundreds of one-pagers, hundreds of press releases.
So you would consult to IR teams of public companies?
Correct. The issuer side, right? So we would do a lot of non-deal roadshows. And I mean, skipping ahead, what drew me to Dakota is this idea of geographic concentration. We always thought in terms of money centers when we were doing roadshows, because you're taking senior management around. Flash forward, team of us worked at a bulge bracket bank in the capital introduction role, and I was using a lot of those same skills, helping managers articulate their strategy, having a little empathy for the LP and the allocator. What information do they need to get out of a meeting and an interaction, and are my managers delivering that information, which was the same skill set from my IR days. But what I was hearing from LPs back in sort of 12 and 13 was that's fine, Andrew. Long short's great. Event driven's great. But we're into commodities. We're into private credit. We're into private equity. And I was within the constraints of a prime brokerage platform. And so a team of us left and we bought a broker dealer and we started Castle Hill at that point in 13.
In 2013?
Yeah.
All right, so take me from 2013 to today.
Yeah.
Size of the firm, everyone.
Sure.
What give us the whole.
It's been quite a road. So we started with 4 partners, and then flash forward to today, we're 2 partners and 35-ish registered representatives.
Gotcha.
So we hold their FINRA licenses, and they conduct sales activity under our compliance and finance and oversight umbrella.
Gotcha. And what funds, like how many funds do you have in your platform that are available for sale for those 35?
So, and that gets into sort of a structuring thing. So we describe Castle Hill as an entrepreneurial platform where someone who wants to engage in sales activity, represent strategies, can bring those opportunities to us, and then sell them and get paid, right? Through the sale of a security. Now, when we started the firm, we talked about, we settled on sort of 4 principles that guide the firm, which is integrity, accountability, collaboration, and control. And so I believe salespeople should be independent, and they should be in charge of their own destiny, and they should be contractually paid. Is sort of I don't believe in discretionary bonus.
Right on.
I like contractual revenue. But collaboration is really the key, is what we're going through. Like, how are we structured? Is we build sort of a lot of guardrails around how do we encourage independent actors who are acting in their own self-interest, right, or pursuing a sales activity, to work together.
Yeah, how do you do that?
So
because by the way, that's just, you have a very unique model, which I absolutely love. So instead of just being a loose confederation of 35 people, you're really trying to make it much more where everyone can learn from one another. I'm not trying to put words in your mouth, but you're taking a different tact on, what a lot of people do is just hang the license. They can do what they do.
Correct.
So I'd love to hear more.
Yeah, no. And that's the nice thing about this thing we do, is that there's all different flavors there's, like a 4 side, which might have thousands of registered reps, and there might be 2 old men in a walnut covered office working on one deal, and that all of those are fine. We decided that early on, and this was a lesson learned from working at this bulge bracket institution, was that 25% of something is much better than 100% of nothing, right? It's
right.
Empirically proven. and so we like to work together, and we like win-win situations. And so at the top of the funnel, we try to screen for people by articulating, like, this is really what we're doing here at Castle Hill, and if this resonates with you, then let's continue talking. But if it doesn't, then that's okay. There's lots of places for you to go. So that's the first thing. We try to focus at the top of the funnel. But secondly, we try to, because all I have is a carrot, I don't have a stick. Right? These are independent sales representatives that we support through the broker dealer, but I don't pay them.
Right.
They're engaging in straight commission.
Yeah.
Right. This is eat what you kill. This is but a very aggressive payout. And so the way we organize it is we, there's when they join. Right, spend a lot of time with them in indoctrinating them in terms of the culture of what we're trying to do, but then we, through technology and through communication, we try to create the incentives where people can break down barriers and work together. So what does that look like? So we're heavy users of Slack. Right?
I love it.
Like, we say email is for outbound, Slack is for internal.
Totally.
Right? It's FINRA approved. It's like, some of us are of an age where we grew up on AOL Instant Messenger, so like we get it. Like, it's all right there. The threads are there. The client communications are there. We do a monthly sales collaboration call, and the keywords are sales collaboration call, where we try to bring everyone together. It's Tuesday at 9 a.m., which is, so we avoid Mondays. Sometimes they're holidays, and it's 9 to 10, and that's it. And it's once a month. Right? So it's not this onerous obligation that we ask of people, because most of people who come to us are running away from structure. They're running away from bureaucracy. They're running away from inefficiency, right? Like, why does a salesperson have to be in at 7 a.m.? They should be out. They should be engaging with, anyway.
Yeah, I'm with you.
Separate aside, right? So and then we're talking about, where are those examples where reps have worked together to achieve success? And what are we hearing from our LPs? And who is the new people on the platform? And what is the next event that we're doing? We're not as prolific as you with your events, but we have a nice space in New York, and we do something in Newport, which is sort of the heritage of the name of the firm, and we do something in Miami in January. So here are these events that the platform is providing. We do product showcases where once 3 of our registered representatives say, hey, I'd like to present fund ABC.
Oh.
Once we get 3 of them, do that at 5 p.m. Maybe someone has a glass of wine, it's all on Zoom, and they introduce the strategy. Someone says, oh, that sounds interesting. Then we do a teach-in with the manager. But I'm not going to schedule a teach-in in front of 30 people where 28 of them don't care. Right. So it's really all kind of opt-in, 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 but we have to do work to create the structure where they can opt in. And then when people are successful, we have a bell in our office. We ring the bell. We give people all the credit in the world. And we, over time, I describe it like a 3-legged race, right? Like stranger, both salespeople, initially protective of relationships, protective of clients. Okay, how do we break that down? How do we create sort of complementarity in terms of working together to achieve an objective? Another thing I do is I look at when we build the top of the funnel, Gui, like I don't need a lot of people to introduce me to Blackstone. Like I know where they are. Right. I got it. But if you're, say, a salesperson in Birmingham, Alabama, that's interesting, because I can't credibly cover that area. Right. If you're in, West Coast, or for example, if you cover a specific investor demographic, insurance companies, for example, that's interesting. And so when I build this, it sounds intentional, but it's become more intentional over time.
Yeah.
This mosaic of all of these individuals who aren't like banging into the same door going to talk to the same person. That makes collaboration easier.
That's
right,
amazing.
because they're adding something.
So tell me about, you Slack, which we're big users of Slack, huge, and especially the younger generation. I mean, it's like Slack everything, and communication and searching. It's really such a powerful tool if used properly. CRM. So how do you think about CRM? Because you do have a big operation, and data has to be managed.
Well, that's an interesting tension point in our part of the business, right? Like how much, when you're talking to someone in their 30s, 40s, 50s, who's built up a base of relationships and competency, and they want to build their business on your platform, how much can you insist and how much can you sort of suggest? Right?
Yeah.
And on the compliance side, 100% insist. Right, that's like that's not in debate, but on the structure, there we have only we suggest. So we do not have a firm-wide CRM, right? We want people to.
I can see why though.
Correct.
Yeah.
And that kind of works for us because I'm thinking about all the time that I've saved by not doing CRM training.
Well,
with a 60-year-old.
How about just playing traffic cop?
Correct.
Right.
Yeah. And they're all calling the same person. Right. So we have people who use Salesforce. We have people who use HubSpot. I use something called Capsule CRM. It does exactly what I need to do and no more. Right. Contact management, tracks my emails, reminds me when to follow up.
That's great.
And but what we're finding is that I assume people have systems, but we're now sort of beginning to strongly suggest that they have system because, as you know, the leverage is massive.
And you're I hate to say it, you're the biggest winner. If they're all managing their data using a CRM and they can do rapid retrieval, you and your partner are the biggest winners.
Correct. Again, like we make little bits of money off of their production, but when you, as one of my mentors said, if you move the cannon 1 degree up, the cannonball goes a lot farther, right? That's how kind of geometry works. And so if we can get everyone to just be, and that's sort of what my colleagues, Shanna and Jeff and I are always sort of endeavoring to do is through carrots, through communication, through suggestion, through intelligence sharing, through credit giving, encouraging people to just be like that little bit more effective, for their own benefit.
Well, I love it. So before we get into your leadership style and questions about culture, could you, I can't wait to get into that just because clearly you're so thoughtful about the business. Talk to us about your other business,
Sure.
as a fund of funds.
Correct. So,
and how did you think about getting started?
It was like everything we've done has been slowly sort of organic from the base. But what I found myself so I have 2 roles. So I, help manage the firm, one of the 2 founding partners. But I also have a sales hat and I also raise capital. And I think that keeps me, relevant. Being on the phone and going into meetings and seeing like just the pattern recognition of when things are on the right track and when things are kind of veering off the track. And when, I think in your book, you mentioned that was a great meeting. Like, what does that even mean? Right. So
That's just a waste of time.
Waste of time.
Right.
Are we splashing around in puddles, or what are we doing here? Right.
I'm a big boy. Just give me the goods.
Correct.
Right?
Correct. And so I found myself gravitating towards strategies that were really completely uncorrelated and almost very niche and idiosyncratic. Right. So what does that look like? For me, it's like natural gas trading or electricity trading or specialty finance, or like lending to the media market, lending to the middle market media companies like video game producers or independent record labels, like small niche pockets where the big boys, it's just not worth their time to enter that space. The competitive environments are smaller. There's some sort of moat. There's some sort of barrier to entry. And within those strategies, the specialty finance, I found myself sort of having 3 or 4 or 5 of these on the platform, and met a gentleman who had a litigation finance strategy. And we decided to come together to build this fund-of-fund vehicle, which is Uinta Alternative Income Solutions Fund, which is a all-weather targeting 8 to 10. Can I say that? I don't know. You can cut it out. All-weather fund targeting a very steady return profile, uncorrelated to anything.
Okay.
Is the purpose. And in there you have just a portfolio of asset-backed, collateralized, not cash flow lending, but collateralized lending strategies to very niche pockets of the market.
Right.
And that's what Uinta is.
Well, congratulations.
Yes. So that was a natural extension of like, I know these strategies. I've helped them raise capital. I know the team. Well, why don't we put some money into them, create a structure, and allow and introduce this to other investors for whom this might be of value. And of course, we invest personally in it as well.
So 2013, you start the business. Let's shift to leadership and how you think about leadership. So could you characterize your leadership style and then how it's evolved over time? And I'll caveat this in saying that my second book is what you read, The Dakota Way. Book 3 is called Be Kind.
Yep.
So, because I lopped off half of the second book to make this, and it's really a lot of lessons learned.
Yep.
So I only asked that, and I just know how my leadership styles had to evolve and evolve very, thank goodness, naturally to what I consider to be way better than when I started. But that's not saying the case for you. Would just love to hear how you think about leadership.
Yeah. So it's definitely evolved. Building a business that's transaction based it involves a tremendous amount of volatility, and so over time, my partner and I became much more comfortable with the idea that every January 1, we would look at each other and we would sort of, as almost like a parlor game, decide opportunity A is we're going to make the most money this year. We're always wrong, right? There's always something else that'll come up, that'll present itself. And so over time, when you string together those ideas, then this idea that we're in sort of like crisis mode all the time changes to, survive versus thrive, right? Like we're good.
Have you been able to bring that down over time, the volatility?
Yes, for sure. Absolutely. I mean, in terms of the success of the capital raising, in terms of the addition of talent, and also the diversification of what we're actually doing, and we'll get into that a little bit.
Yeah.
But when you're not, I mean, this is being quite honest. When you're not like stressed out about the business working, you have it's a lot easier to be kinder. Right. And it's a lot easier to be more supportive, and a lot easier to be more helpful. Yeah. But so I alluded to my time in Asia. We talked about and there's a phrase, and when I lived in Malaysia, it was like the fish stinks from the head, right? And so if we think about the 4 principles of integrity, accountability, collaboration, and control, it's like Jeff and I have to be like 5x both of those.
Right on.
Right. So we need to embody and model that all the time, right? So we have to be, more honest, which is easier for me because I'm not smart enough to hold a lot of lies in my head. So, but like I have to be the person to, to model that behavior. When I make a mistake, I have to acknowledge it, right? So I give so much credit away. So that's really, when success happens, like, I don't need credit. Like, we're fine. Like, the firm is fine. And I think that was a learned behavior, because, you start off, you need to prove things, right? And now we're good. We don't need to prove things. Now we just need to help everyone else be more effective.
Well, yeah, just because what I really was trying to get at, you answered part of my question, but I'm really just curious, just for all of us out there, right? There's different ways of treating people and behaving. Like you were saying, you bring that agita down,
mm-hmm.
right? Because for me, the whole goal is super hard charging, do it with kindness, but try to be 80% low vol, where everyone's just executing every day versus the ups and downs and crises and fires being put out and this isn't working and everyone's freaking out, and it just wears everybody out, right?
Yep.
And if the goal at the end of the day of any organization is to keep your best people, which I think it should be, high vol, right, eventually doesn't allow that to happen, right? People eventually vote. I got
absolutely not. And I've either fortunate or not fortunate enough to have leaders in my past who modeled pretty volatile behavior, right? And that created a lot of anxiety and agita. We're in this unique situation, right, where, like, if I paid people, then I could actually influence them a little bit more, right? So then it's really this sort of choreography and of trying to encourage the right behavior. And how do we do that? I think trust, like, as we do this more and more, the other thing that's somewhat complicates matters is that we're in the business of dealing with salespeople,
right?
And they're all charming, and they all can talk, and they're all have some success at some point, right? And so working on, like, trusting our gut and really setting expectations, like, we're in this. This is a business. We're not the public library, right? We're going to hold your licenses, and we're in this to make money and to do things the right way. And I think the reputation of the firm is pretty strong. It's because there's not a big delta between the expectations that we set, employees, clients, investors, and what we deliver.
Yeah.
And that's,
I think that's everything.
That's everything. And,
right.
and
when I talk about in the book, it's the first core principle. You got to set expectations.
Correct.
And then if you set expectations internally of certain behaviors, it's as long as you follow the behaviors. If there's two rule books, right?
Yeah.
Or two, as I said, there's two, there's 300 members, right? There's a rule book for two.
Yeah.
There's a rule book for 298.
Right.
That doesn't work.
Right.
Right. It's got to be one rule book, one team.
Right.
And so if you're walking that talk, the core principles, I didn't appreciate it. We put them together. We call them decodisms. I didn't appreciate how much they are truly the guiding light of everything we do. So when we have a decision to make, I look at our 12 core principles and you point to them.
Yep.
You're like, that one was violated. Okay, we have an issue.
Yep.
Right, the whole thing. And it's amazing how you can use little words like North Star, but my favorite thing was when this consultant was asking us about our core principles. We're trying to come up with them, and it's like these terms. And I'm like, well, we have these things we call decodisms. Like we grow apples, we sell them to apple buyers. We're going to try to convince orange buyers to buy apples. She goes, that's your core principle.
Right. Right.
And so we'd already done it. But I had to make it up as I went along, just
Correct.
to, like, show people. It's like, no, that's bad behavior. This is good behavior. That's bad behavior. No great meeting.
No, absolutely. And I mean, my sort of circuitous path through, from being a teacher in Malaysia to being a, IR to being at a bank, I was like that, the movie Big, Tom Hanks is like, I don't get it, right? I'm in these big meetings and where you're not supposed to talk, and you're supposed to shut up. And so it became quickly clear, and we were fortunate enough to have this window where there was a gap in the line, and we went for it to start the firm. But it was only through doing our own thing could we really live the values that we had, which is like, of course we're going to work together, right? Like, zero sum is not in our nature, right? Like, everyone can win. Like, how do we create win-win-wins? And that's not natural in a bank environment. That's not a natural, I mean, maybe.
No, I hear you. Yeah.
So, and also, like, we had very good luck because we set expectations, but there are these, odd situations over 13, 14 years of running the business where maybe someone is a little bit in the gray. It's like integrity. let's move on.
Gotta go. Right.
And
then, by the way, that's good for them too. That's why I've always looked at it, right?
Yeah.
It's good for them too. When it's not a fit, it's not a fit.
Correct.
Right. And if you can't honor the core principles, no harm, no foul. You're not a bad person. It's just we believe in this and you don't, and that's okay.
Yeah. And what we do, it's not rocket science, but it's really hard. Right. It's not like, raise money. Okay,
sales is impossible.
it's so hard in the best of circumstances.
Because you're going to work every single day and someone's going to reject you all day long.
Correct.
And fundraising, it's the only sales job I know that you only can win and you have to set up the meeting. And you only win by setting up more meetings than someone else with qualified buyers.
Correct.
No matter how sophisticated you get.
Correct.
But then, so that's so pedestrian, then you got to flip into the storytelling.
Yep.
Then you got to be in a meeting and you have to take this super complex story and simplify it so the person can get it and retell it.
Correct.
That's a complete art form.
Right.
Right.
That's a separate module.
Yeah.
Right. And then you got to follow up.
Right. And then in order to get there, you have to be so pedestrian and you have to say to yourself, did I really spend all these years training and doing college to send cold emails? Right. That's what you're getting at, right? That's why I say that, like, with some coaching I gave to someone recently, they're like, what should I ask this person a question? I said, ask them what they're going to do the first day on the job. He goes, why is that important? I said, because if they say, I'm going to redo the website and I'm going to redo the pitch deck, okay, then you just say, really enjoyed meeting you.
Yeah.
I'm moving on, okay?
Yeah.
I say, because those are called warm places to go live, okay? Yeah. You only make money in raising money by going to the cold place, which is sending cold emails. But a lot of people, that's the first thing they do for 6 months and they get fired. They don't know why.
Correct.
And that's why I wrote our book. It's just like, no. The answer is day one, I just want to start setting up meetings.
I admit to a certain amount of sort of cognitive dissonance with like, well, I went to college and I'm booking coffees and like, but you have to be there at the mind face. Like that's not something you outsource. You can't.
And it's also fascinating about the software business versus raising capital.
Sure.
Is that in raising capital, you meet somebody, they could be a 25-year relationship. You don't pawn off the relationship.
Correct.
If you know the CIO of XYZ and what have you, family office, public pension fund, whatever it might be, you're with that person for 20 years. In the software business, right? Now we would have relationships. Our account executives, they make the sale, it gets passed on to CSM, who's dedicated to that, back to the hunter. You with me? So it's a very unique deal. So you can't have somebody booking meetings for you because they're your 5 year, 10, Gui, what's up? Why is Rachel like, you can't send me an email, right?
Right. And that's what and it's a great point because that's what I tell salespeople and alternatives, right? The natural inclination is to go work in-house, right? Find the next hedge fund, find the next private equity. Let's stay in the hedge fund space. But you have one bad month and you're kind of in the penalty box for 18 months, right? And what was a point of resistance for me when we started the firm was I'm leaving this bank environment with a brand. Like, will people return my calls when I'm just this guy?
Yeah.
Right. And if you have relationships, they do. Right.
Exactly, yeah.
And that's like, if there's one fundamental thing is like, that's the value. Right. And especially if you think about the areas that we play in, which are capacity constrained, highly idiosyncratic, unique little strategies that maybe can scale to 2, 3, 500, 750 million, right? These are not multi-billion-dollar ETF launches. And then you layer on, we talk about AI, but what about, the deep fakes and voice recognition and email spamming and text spamming. And so how do you cut through all that?
Right.
And that's where like the relationships really matter. They matter much more in alpha world than they do in beta world because the actions of the individual are really, so you have to know their temperament, but also like, how do you get in the door to get meetings on the tape and start that conversation? So we think a lot about that. And so so we host events so people get to know each other. We share a lot of intelligence, and try to create this environment where I win by sharing. I win by like, hey, I had coffee with so-and-so and they don't want anything I'm doing, but they want middle market private equity. Do we have anything on the platform? Yes. Talk to Joe, whatever.
There's no doubt that concept of helping other people get what they want out of life is way more gratifying than anything else you'll do, right? So, okay, with that, two questions to close.
Sure.
What advice would you give a young person getting into the investment sales business today?
That's the one where I was like, I'll think of something. And then I just kept on writing. So, and part of this is I wish someone had taken me aside and told me these made these suggestions earlier. So the first one is that like everyone matters, right? Everyone, right?
Yeah.
Senior person, receptionist, analyst, they all matter. First of all, in where you are in the arc of your career, they're gonna move on and do other things, right? So there are no small people, right? Everyone matters.
Including the waiter, the waitress, the barista, the whole 9 yards, right?
Whole 9 yards.
Everyone.
Whole 9 yards.
Yeah.
I think when I was younger, I got wrapped up in a lot of office gossip and politics that I wish someone would have said, listen, no one cares, and it's all going to come back to you.
It's the single biggest waste of time.
It's a colossal waste of time. So just don't engage.
So my line to the team is, to our president, I said, Rob, if we're talking about somebody, they got to go. Because I'm not wasting another minute. It's obviously not working, and they've got to go. And I love them, but it's just not the right fit. But I'm not spending time during the day talking about people. We're here to produce and get stuff done, and move things forward, and help people grow their careers, serve our customers, right?
Correct.
All that other stuff is, so I just when I came down, I had an interview with a new CSM, and she was making this comment. She worked at a somewhat bureaucratic, big, health insurer. And I said, are you familiar with what a day one firm is? That terminology, Jeff Bezos coined it. And she goes, yeah, because I was at a startup.
Yeah.
I said, yeah, and the whole goal is to stay a day one firm for your entire existence.
Right.
And we have themes for our monthly offsites. We call them W days. The theme two times ago was speed.
Yep.
So I said, we actually need to increase the speed at which we're getting stuff done, increase our decision making, not decrease. Because if we start slowing down our decision making, it's over.
Yep.
Like the ship has sailed, it's over. We got to maintain that speed and then eliminate all bureaucracy.
Right. And you live that by your productivity, and the fish stinks from the head. Like, you are modeling that behavior. You are not settling, which is the model. If you are like, I got to, I know you're a good golfer, but like if you're just golfing all the time, that sets there's a bit of incongruence between that. We have a mantra every year. I mean, we should maybe do one every month, but we're still working on. But we talked about.
In all fairness, we had offsites, and then we convert them to W days, and there's no prep anymore.
Yeah.
It's what's working, what's not working.
That's great.
So the group comes in. It's unbelievable what can happen in 30 days, despite communicating all the time. The only reason I then just woke up one time like 6 months ago. I'm like, you know what? We probably should have like a theme,
right,
for each time.
Right.
And so I just come like the theme this time was communication.
Yeah.
Amongst which like kills me. You're doing something that's really working, right? And you just don't think to communicate to everyone like, hey,
Correct.
did you know that, hey, I've got this thing bubbling up over here.
Right.
And I'm like, it's okay. Just take 5 seconds, 10 seconds, send it, whatever you have to do, but just communicate it. And so my challenge to everyone is just like, just think about in your day to day, what are the great things that you're doing that might not be communicated that everyone would really benefit from. So that was the theme.
Yeah, that's such an important point. We have on our whiteboard, from a theme, from a mantra, from a sort of a, positioning, if you will, is just humble and hungry, right? Like,
love that.
We can have a great day. Tomorrow we're still back at it, right. And this is what we're doing. So stay humble and hungry.
And that's so a core principle to your company.
Yep.
Right. I mean, that's so like your company.
That's it.
Right. It's not like you're going to like, that's you.
Yep.
Right. Meaning, I love that, but you've defined it as you. That's like something no one else probably has as one of their core principles.
Yeah. We don't have a lot of room. This is not a place where egos really flourish.
Yeah.
It's like, because it's just you're getting doors smacked in your face, you're working hard, you've got GPs and clients, like, where's the money, so you're in the middle of this relationship. But to point about more ideas for younger salespeople, like, I think when you're young, you should spend a lot of time differentiating yourself in terms of take your CFA, do your CAIA, do your CAIA. Like, there's, you can go out all night, you can get up at 4, you can study, like, you're still in the habit of being in college. Like, there's a real good opportunity in your 20s to put some letters after your name and really differentiate yourself. Which, when you get in your 30s and 40s and have kids and start buying couches and whatnot, like that changes. Read, like, be interesting on something other than work. Right. It's just, you never know where that affinity, like, so I'm a big believer in affinity-based sales. And so, whether that's college alumni, whether that's golf clubs, whether that's, but it could be in hobbies. It could be in something like be interesting in something that's not, macro hedge fund ABC. So go to college reunions, go to high school reunions, like just the network is so important. And it's not going to be completely on the screen. It can be leveraged through doing a running club or whatever, right? Like really get out there, and pay it forward. Like don't keep score, right? And that compounds, right? Oh, he's that guy. Yeah, he helped me here. He helped me there. So much of what I do, Gui, especially in the family office world, which are big buyers of some of the idiosyncratic. And it's not, as you know, it's not a channel. It's just a heterogeneous group of entities and wealth creators, and there is no through line in terms of what their asset allocation mix is. But I'll say, we're looking at this, we're looking at that. I said, okay, well, here's 4 ideas. None of them are my clients, but I think they're pretty good. And in 2 years, maybe there's something for us. That's how I've built over time. And why not start that early, right? Why not start helping people earlier than later?
Gotcha. All right, last question.
Sure.
It's been so much fun. Biggest challenge you're faced with today in today's market environment?
Yeah, this market environment, telescoping up a little bit higher, is when you're running an entrepreneurial firm, where are you spending your time, right? Where's the best return on time? Is it human development? Is it sales? Is it processes, which is sometimes take a step back before you go forward? Are we bringing on the right people? How are we getting better at screening? But in this environment, kind of reminds me a little bit of COVID, right? Where you were just having conversations and checking in and sharing intelligence, right? Like this isn't really a hardcore sales environment, right? People are not freaking out, but on the verge of freaking out. And you need to be there to educate them and to share. Okay, well, I heard this from someone else, or I got this macro note. Can I share it with you? Like this is where you're just there to be of assistance and not say, hey, where are we with this? Like you didn't get back to my email. Like that's not really reading the room.
So well said.
Yeah, but we deal with idiosyncratic, uncorrelated strategies, and the market's been melting up for 3 years, and now we've got some volatility. And maybe this is a good time, right? To then go out to people that didn't have time or the inclination or the space to look at what we were talking about 3 years ago. But because we have a CRM and because we track such things, it's time to revisit some of those conversations.
We have a term that I did since day one. Had to put this into writing. Every day is a great day to sell. Sunny, rainy, markets up, markets down. Every day is a great day to sell. During COVID, we'd be doing our Dakota Live show.
Yeah.
And this is in March, and people would be going, the market literally, I had a comment to Bodie Miller couldn't ski that slope. and I said, but guys, I'm just going to tell you, get on the phones, get on the emails. Right. People are like, well, it doesn't make sense. I'm not going to start prospecting until the fall. And I'm like, you've lost your mind.
Right.
I said every day. And by the way, you don't need to sell anyone anything. You have an allocator who's at home with 3 kids and 3 dogs. He wants to get in the driveway so badly, on the phone, talk to somebody to get out of the house. But if you're a small cap manager and those small caps getting killed, give them insight on what your portfolio manager is seeing in small cap. Like just provide insight.
Yeah. No, and that's how the whole business has changed, not to veer up, but like used to be you could show up in Dallas at the Crescent and do a bunch of meetings, and then all of a sudden, like you don't know where anyone is, right? But during COVID, you knew they were home. Right. So like you can get them. They're not necessarily. And
now it's all cell phones. If you're trying to call somebody because their office,
correct. And now no one answers their cell phone. But there's no crying in baseball, right? Like this is a very hard thing we do, but we're blessed to do it. Like I just keep we're surrounded by incredibly intelligent people. We're able to be of service, right? We're running our own businesses, right? We're adding value to investor portfolios.
Love it.
Like what else do I need?
Yeah. Andrew, thanks so much for being on. It's a real treat.
Yeah, my pleasure. Thank you so much for having me.
And by the way, your leadership style just showed through in the interview. So it's such a positive, enrolling style that you have. So congratulations.
Yeah, we're having fun.
Great.
We're having fun.
And with that, everyone, that wraps another episode of the Rainmaker Podcast. Thanks so much for joining, and can't wait to see you on the next episode of the Rainmaker Podcast.
You can find this episode and others on Spotify, Apple, or your favorite podcast platform. We are also available on YouTube if you prefer to watch while you listen. If you would like to check up on past episodes, check out our website, dakota.com. Finally, if you like what you're hearing and seeing, please be sure to like, follow, and share these episodes. We welcome all your feedback as well. Thank you for investing your time with Dakota.
Hey, thanks so much for joining Rainmaker Podcast. Hope you enjoyed the show, enjoyed the interview. I know I loved it. And hey, if you wake up in the morning and you raise money for an investment firm, you do cold outreach, whether you're a sales leader or salesperson, and you don't know about Dakota Marketplace, we would love to show it to you. It's world-class. It's used by over 880 investment firms and over 3,600 individual salespeople. To learn more, go to dakota.com and click on a free trial.